Hello everyone, long time no see. Okay, so let's do a quick video today and let's cut the long story short. So today's format is just simply going through what is happening through the market recently and then of course going through the market means looking at the indices and then looking at the individual stocks in the Singapore arena to see what are the stocks that were moving. Then let's look at any potential chance that might be arising going forward. So what's the market outlook? If you look at the market in the US, mainly they are cheering the interest rate cut where last night FOMC meetings minutes were pointing to September rate cut. Then this Friday we have Jackson Hole meeting, so likely it's going to be a positive news as well. So the Fed should not be too hawkish, but they will not be too dovish as well. So when you talk about hawkish means increasing interest rate, dovish means cutting interest rate. So if you look at S&P 500, which is my benchmark, which I've been covering in many videos, you are looking at S&P 500 going towards its recent high or the July high around 5672 or 5669. If you were to look at the over here, when I mouse over, the candle is 5669. And you are actually looking at the a V-shaped recovery from the S&P 500. So I was in fact wrong because I was expecting a second wave of sell down. Then I would look at the action to buy in more over here, but actually it did not happen. It gave me a glimmer of sign that it may come down to here first, then do a double bottom to rebound. But S&P 500 just simply go up. And last night, like I say, FOMC meeting minutes give the market some positive sign. That's why it was moving up. So going forward, what's the outlook for S&P 500? I think based on the current movement, there might be a chance for it to retest this resistance, and then there might be some consolidation going on around this area. Then they consolidate strength to break out from the all-time high resistance and move higher to form another all-time high. Now, looking at the Asian market, if you look at STI or Hang Seng, right? Hang Seng first. Hang Seng is still on a long-term downtrend, but short-term, you see there's some uptrend coming in where we see higher high, higher low. So we have this low, higher low, and now can it successfully form a higher low here? It remains to be seen as today seems to be weak. The bounce, the higher opening is meeting some selling pressure right now as Hang Seng is breaking its intraday low to go lower. And today's closing, if it closed at 173.390, still there's still chance for it to recover tomorrow, which is Friday. And if it recover tomorrow and end the week in a decent level, then there might be a chance to retest a resistance here. So this resistance is a major resistance now because it was some resistance here and then now it got tested and pulled back, so it became a major resistance. And S&P, Hang Seng should break up from here to continue higher if possible. Okay, so we shall see what's going to happen. Today's closing is very important. If doesn't close high, in fact close back to 17212, then goodbye to Hang Seng, maybe turning back to downtrend. And yeah, we got to wait longer for it to really recover. STI looks better. If you look at STI, it is just trading below its resistance. The V-shaped recovery or the U-shaped recovery is still intact, and it has to either break up from the resistance to continue higher or pull back lower to fill up this gap support over here to 3319, then form a base over there and rebound up to form the higher low to go for the uptrend again. So it'll be a tricky period in September, October, because technically it tends to be a low month during these 2 months. We have US election in November, so the market will be looking at how US perform, then they will decide, except for Hang Seng, except for Hang Seng. The Singapore market should be still trying to mimic where US is heading. Of course, it's not as strong. You can see S&P 500 is a V-shaped recovery, where although STI did its own mini recovery, but it's not as strong because it's not near its high at 3509. Nevertheless, it's still good already. Now, going to the email that was sending every day, if you're receiving it, thank you for your support, because most of you who receive the emails are trading with me. And yeah, I'll just start with StarHub, then I will go down the email. So here, of course, as usual, you can see the daily coverage of the S&P 500, and step by step we see the rebound. Here you can see we were talking about StarHub. I was talking about StarHub here, and I was waiting for it to break 126 resistance to hit 138. Unfortunately, the breakout didn't happen. I will see the chart later on. Then the ex-dividend, so the consolidation still continue. And yesterday, a bad news for StarHub because their service was down and is slowly recovering right now. Then we have 30th July. We talk about Parkway Life REIT at this support level, looking at to rebound back towards the high. I think after that, it gives some dividend. So let's look at the chart. So this perceived high at 377 may change in value if the chart adjusted for the dividend, but just take a note at this 377. Then we have this sets, okay, was highlighted here, right? Trading at the 20-day MA. So we're expecting I'm expecting some rebound to hit 333. But if you were to go forward during that time, late July, the US market was facing some sell-off because of yen carry trade. So this yen carry trade, what does it mean? It means that a lot of people sell off the US dollar to buy back yen. Okay, when that happened, means that when they want to sell the US dollar, means that they got to redeem it from stocks. So they have to sell off from stocks, and then they unwind their position in stocks, and then use the US dollar that they gotten from it, then to buy yen. So meaning to say yen appreciated that time. And it was a head and shoulder pattern as highlighted. So we are looking at during that testing period, since that SETS is giving us a glimmer of hope that it might be rebounding to 333 level. Okay, and then we are looking at after that we're looking at Wilma for double bottom or triple bottom breakout, but it didn't happen. We'll look at chart later on. And S&P 500 start to firmly form its head and shoulder pattern, which I indicate in the chart, and then therefore lead to the sell-off. And then of course, yeah, there wasn't any stocks that was highlighted because I think the market was bearish. STI was breaking low. Then let's go to the other stocks here, see if any stocks. Okay, no stocks, but yeah, follow through S&P 500, and STI was breaking down, hitting projected level here 3316, and projected level for S&P 500 was 5095, or rather about 5145. Sorry, 5145. So then the next stocks that we are talking about is Dynamac. So Dynamac forming the second hammer and looking at to go up higher. Then we have SETS on the second coverage. SETS bounce up, as you can see from the first email. It did bounce up, trading very near to 333 resistance, but because of the US market weakness, you can see it straight away dumped to the projected level here. And then of course SETS got to break down. So SETS break down Nevertheless, we're still holding on to a position. Why? Because we know this is not a normal sell-off. And then SATS presented another opportunity which has two hammer at the 50-day MA support. As I mentioned here, the 50-day MA is the last line of defense, right? And the result is on the 20th of August. Okay, so the global yen carry trade that I mentioned. Then whole market was down. By the way, SATS was highlighted again, right? Let me go back. Sorry for the swing. So then I also highlighted that the financial sector should be focusing on right now, as a successful defense of the support could lead to a potential upward movement. So I highlighted that we should be looking at the financial sector at that low, and you have gotten some of those stocks over there. Congratulations. Okay, SGX, we are looking at projected to go to 1035 back then. Okay, so then we are seeing DBS highlighted, forming a hammer, telling us that it is going to 35.30. Okay. Then we see RH Petrol Gas potentially going up, but this is a no trade counter. Why? Because it gap out so high that there's no way for us to chase. Then Riverstone, expecting it to break the downtrend line to go up to hit resistance. And then we have, we have this counter. So let's go through one by one on the chart. Riverstone, let's start with Riverstone here. Yeah, so Riverstone, okay, did go to the resistance and got resisted big time. So it did not actually break out from the resistance. So 945 was the high. And if you do a quick trade, it's just a 3.5 cents. But typically people buy 10,000 share, make $350, they might be happy, they take profit. But if you're still holding it, the stocks is still not doing badly, because this is considered what we call a pin bar or a doji, which suggests a confirmation of resistance and potentially lead to some pullback. But it did not have strong follow-through selling, so there is still chance for Riverstone to go up. So hang in there if you're still holding it. Okay, then we have this RH Petrol Gas. As I mentioned, it is not tradable because it gap up so high and you just rally all the way up there. Okay, now of course it presented another opportunity as it retests the support, the gap support over here, and trying to go up. So the resistance for you to look out for is 156 if you are taking the trade. Then we have this, like I mentioned, DBS 35.30. So DBS target was 35.30. It exceeded the expectation as it went to 35.78. On in between, there is still a dividend given up, so you're making much more. So congratulations for those who caught the financial sector at the low. As I mentioned the email, UOB was also at the low here. So if you bought some UOB here, congrats. And then OCBC was here as you will be making some profit. So if you buy three counters, 100, 100, 100 each, you will be easily looking at $600 to $700 profit. So if you, let's say, for example, you buy OCBC here at 1373, thereabouts, and now it's making a 63-cent profit or 58 cents profit, 100 shares will be pretty decent, is it? 100 times 100 okay, so $59. Of course, if you have UOB, if you got something like the 29, 28 here, and then you saw off, so 100 share will be $133, and then DBS, if you got something here, say you got it at 33.40 cents, then yeah, by the way, these counters, you still get the dividend if you got them. So I'm not including the dividend. So DBS is about, if you still holding, is 215. So if I use the dividend to compensate for the commission, which is $10, $12, including SGX charges. So 215, 133, then that will be about 345 plus OCBC about $70. Then you're looking at $400 to $500 plus dividend. You are looking at $600 already. So a lot of people like to think big. You know, I buy too expensive counters, I couldn't make some profit. But if you have limited capital, right, don't need to think big. You can still profit. And from the market, let's say for example, you only have 5,000 or you have only $15,000, and you can make some decent profit, 600, 700 by trading the banks as well. That can give you a kickstart to help to build your capital, accumulate capital higher and higher, so that you can go for more trades. So of course, you might argue 15,000, I can go for smaller penny counters, and then I can make even more. But of course, the risk is equally high. If you buy small counters, you could be making now, but the selling pressure going forward may let you, which I witness, many vomited out the profits. So the bank so far, I haven't seen any people lost back their profits, as if they're wrong, most of them continue to hold on, and eventually they emerge as victorious. So yeah, so the finance sectors like SGX is very strong. You can see it already hit the target, projected target, and congrats if you, even if you buy 500 shares or 1,000 shares, which is $9,000, you are looking at as high as 77 cents, and that will be $770 if you buy 1,000 shares. If you buy 200 shares, it's still decent, $340. Okay, that will set you back about a $9 plus counter. 200 shares will be about 3,000 plus. So if you have 15,000 allocation, 3,000, 3,000, 3,500, 3,500, 3,500, you should be able to get a very good return from the trades. Okay. So then we go back to Dynamac, and finally SATS. So Dynamac actually went up, hit as high as 62. So congrats for those who entered to position. And today it actually has a bullish engulfing pattern and potentially going up higher. If it really goes up and confirm to go higher, 625 will be the resistance to meet. Okay, then SATS, congrats to all SATS, really did us proud, as all our trading opportunities pan out to be good, and SATS actually hit the high of 360, which is the resistance. If you have taken profit, congrats. If you have not, it's still at the high. So yeah, so there's still chance for you to take some profit. Okay, but the volume on the sell down is pretty low right now. Probably today is some profit taking day, and hopefully it can stay around above 350, so that you can have another round breakout above 360 to continue go higher. Okay, so that's all from me. I'll see you again. Good day. Goodbye.